Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 22nd of May. Starting off with Boston, and here we had a good end to the week, bouncing off the floor of that broadening triangle that's been in place since October. For March, April, we had the bullish divergence, which looks like it's finally kicking in for the shares. I want to see more price action above the 50-day moving average around 1.1 pence. If we can get that over the early part of this week, then we could head up to 1.7, 1.8 pence, maybe as soon as the end of next month. Obviously, we don't want to see any fresh lows below zero point 0.9. Moving along to a company I met yesterday at the UK Investor Show, so it was good to see Jerry and the gang. DeepVerge here. It's just interesting to see that we're still coming off the back of that bear trap below the old March support around, call that 12 pence. We had a 2-day dip below that, but since then about a week above the old 12 pence support. That's sort of sideways shuffle over the recent days as well. And bullish divergence in the RSI window, so the lower low for May, but higher RSI trace, and that can be the a leading indicator on upside. Initially, obviously, the 50-day moving average there at 13.75 is in the way, but after that, we could see a move towards the upper teens, maybe even 20 pence at that March resistance line projection, and all of that could start over the next 4 to 6 weeks. Moving along to a stock which I know somebody has highlighted on Twitter. Here we've got Europa Metals, which on Friday broke that line of resistance from January, and the 50-day moving average around 3.6 pence. We've already had a bullish divergence for February to April with the lower low for, or the lower lows for April, but higher RSI trace. And that looks like that's kicking in with a delay. You can have a sort of 1 month delay on that kind of setup. And the longer we stay above 3.6 pence and the 50-day line, the greater the chance of a move to the December resistance line there and the 200-day moving average area around 5.25 pence. And maybe that's on cue for the end of, or by the end of next month. On to a stock which has had a good 2022. Here we can see that the action was certainly in place for January to March. Since then, we've had a bit of a consolidation, and we had a brief, well, I suppose a retest of the March, that late March low around 12.7 pence. Above that, and with a weekly close right on the 50-day moving average around 15.1 pence, or right above that actually now. We're looking towards the 20 pence area, which is a line of resistance from this time last year. Above that, shares could actually, we could actually start targeting 25, 27 pence, but let's see if we can get to 20 pence first while we hold above that 12.7 pence swing low. But the rising 50 and 200-day moving averages giving us confidence that the stock is ready to deliver a reasonable leg to the upside. Another stock which is looking rather better now is MyHealth. Checked here, it's just ready to break that line of resistance from back in August. It's already broken the 50-day moving average around 1.8 pence. And we can get some decent days above 1.8, 1.9 pence during this week, the coming week. Then the target here initially obviously around 2.25, but we could then retest 3.5 pence, which was the late November peak. And maybe that could be on cue for the end of next month. Big picture target over the next 2 to 3 months as high as 5 pence, but I think we'll just be happy with 2.5 at the moment over the near term. Moving along to one of the better stock market newcomers of the recent past. Here we've got Mila. Good end of the week here. We actually bounced off the floor of this rising trend channel from February. Bit disappointing that we just went back below the floor of that gap that we had back in April, but nobody's perfect, and the view now is at above 4.5 pence. There could be another attempt at retesting the 6.5 pence plus peaks that we had at the turn of the month, and all that action over the course of June. Moving along to a stock which has certainly been in the wars of late, pure gold mining, and just the first signs of a recovery here. I have to say it's very tentative, but the reason for the inclusion today is the way that we've effectively had a triple bottom for the stock just below 10 pence, right 9.9 to 10 pence area. And Friday we had a gap off the low, unfilled gap to the upside, which is looking, makes this thing look as though it's ready to turn. Initial target there obviously around 16 to 17 pence, and maybe that could be seen over the next 2 to 4 weeks while we remain above 10 pence. Next situation is ShoeZone, which is not normally the type of stock we look at here, but as things are looking rather thin at the moment for obvious reasons, here it is today. We had a false breakout of that resistance line there from back in February. That was running around the the 150 level. But the longer the shares stay above 150, the greater the chance of a move to the top of the rising trend channel from back in November, as high as £1, well, 90 in fact, and that could be seen over the next 4 to 6 weeks. A nice rebound on Thursday off the rising 50-day moving average, that rising 50-day line giving us extra confidence that the shares could trade higher. End of day close stop loss back below 150, probably the best stop loss at the moment. Onto a stock which I don't think I've heard of before. Maybe I have, maybe I haven't, but we've got SLF Realization Fund, which is sounds rather intriguing. But here just see these shares breaking that line of resistance there from February. There's bullish divergence as well, so if you can ignore the fact that this looks really illiquid, there may be an opportunity for some patient traders to get involved, initially looking for 12 pence over the next month or two. More usual fare to finish off with, the technology minerals. Here you can see that there was a gap higher on Friday, which is normally significant. I suppose the natural support here was around 2.6, 2.7 pence, so we've stayed above that for May to date. Above that, looking for 4 pence at that February resistance line projection, and maybe we'll see that by the end of next month. That's it for me today on a rather thin edition of the Weekend Bulletin Board Heroes, but hopefully the markets will improve soon.